Welcome. We are back. All right, new week in the market. Also, quick little announcement: Monday streams are returning too. So I know no stream yesterday, and there hasn't been streams on Mondays for a while now. But we're gonna be doing Monday, Tuesday, Wednesday, and Thursday for the foreseeable future. Back to 4 days a week, basically the 4 trading days in which the market is open the following day. And yeah. Vibes in the chat. What's up? AK, J Long, Frank the Tank D, Nerve, Corey, IME, I Repair, Danny. How are you doing? Make sure you check out the links in the description. Hit the like button. And let's get into what is happening across the markets. All right, if you're new to the stream, I start off with crypto, then I talk about other markets, and then I spend a good chunk of time talking about the stock market and individual names. Just a quick little preview. You had the breakout test, you failed it, and now you're breaking down from a new pattern. We're going to talk about in a second, but let's start off with crypto. Bitcoin is still consolidating. It broke under the 17.5k support, double bottomed at 15.5k, and is now heading back up to retest that previous support as a resistance. You do have a little bit of hidden bearish divergence on the daily alongside a resistance above you, so this is a little bit of an area of turbulence. It might be a little bit tough to get back above those levels, at least in the short term. Yeah, you're just going sideways around 17k for right now, nothing too crazy. Ethereum is consolidating just above an inflection zone. This blue zone over here around 1200s has been both support and resistance for the past half a year basically, and you're still testing that. Moving into other markets, the US 10-year is still testing the 3.5% support. That was your highs from June, and you're currently testing that right now. If we go over to the weekly time frame, if that does end up breaking, your next support is around 3.25% from highs in 2018. Energy has been selling off after rejecting this resistance and breaking down from this rising wedge. You are testing some highs from the end of August, and then after that you have some support around 79. Also, your 200-day moving average is there. Moving on to metals really quickly, you did just get a rejection of the 200-day moving average. You also have some confirmed classic bearish divergence on the daily for gold. So it's been a nice little run since the breakout of this down sloping channel. Got up to the 200-day moving average. Now you're seeing a little bit of turbulence. Silver as well did print a bearish engulfing candle yesterday. Also has classic bearish divergence on the daily. However, it's kind of above support. It's still above these lows from the end of last year. It was also resistance this May. So it's still kind of hanging on. Again, if you're newer to the streams and you have any issues or you're struggling with understanding some of the terms I bring up, there's a free course that I made. The link for that is in the description. Moving on to the dollar currency index, it broke under the 200-day moving average, but is now running back up to retest that level. It's also a high from June of this year and kind of lows from August of this year. So 105.7 is a pretty big level there. And then finally, for other markets, the Hang Seng Index is floating a little bit higher after this little inverse head and shoulders breakout, but keep in mind you do have some resistance around 20k. That's roughly where your 200-day moving average is going to be as well. So that's a really quick recap on what's been going on in other markets. Before we even get into the overall stock market, I want to start off with the VIX, which has been in this down sloping channel while the market has been rallying pretty much for 2 months. All right, for 2 months we have seen the VIX continue to sell off within this down sloping channel, and today you broke out of it. Shout out to Zeke, who is in the chat, for spotting this. And also, if we go over to the weekly, you've been in this little zone over here. Let me just make 2 quick boxes. You've been in this zone pretty much the whole entire year, this rectangle. You're also at the bottom of that as well while you were breaking out with classic bullish divergence on the weekly. So I'm going to extend this triangle just a little bit. I'm going to use pretty much this little area as a fake out, but we're kind of getting back towards the apex of this VIX triangle, and we saw what happened. This is another thing that Zeke mentioned a couple months ago on one of the streams. We saw what happened the last 2 times we had large triangles. Even apart from this, I think the major picture here is a range, in fact, and you're starting to curl up at the bottom of that range. I mean, these are all bullish variables for the VIX, so we are starting to see that. Another thing I do want to look back at is on the 4-hour. A couple weeks ago we had, this is when I was very bearish on the market, and then I kind of got faked out with that move higher to test the 200-day moving average. It happens. But that bat pattern I was talking about, I mean, really between the 886 and the 113, you're in that pattern completion zone area. Preferably you want an 886 or 113 reversal. But what you ended up doing is just reversing off the same exact low you put in August. Also, that lines up with some lows from April. So $19, which was the level I talked about in one of my last streams when we were looking at the VIX, did hold as support. We're starting to rally off that level. You did break out of that. This is where your market is starting to turn around. And if we head over to the SPY, it's at the worst possible area ever. Prior to the couple of days where it looked like there was a chance, and I kind of was flipping a little bit, I got faked out. Prior to that, I was talking about this resistance zone, the 200-day moving average, the MACD losing momentum, volume going away, the upper Bollinger Band, all the different bearish variables right around the mid 400s to 410 level. And you ended up rejecting that. You had a 70-something% chance of a breakout just because of this partial decline, but I kept saying for weeks that I think this one's different. I wouldn't put too much trust in that partial decline because we had already been rallying for 2 months and there was just so much resistance there. It was just that one day when Powell was talking, we got this huge 3% move up to test that level. You were so close. I mean, realistically, all you really need to do was go up another like 1% and then you would have broken out. But that is how perfectly, and this is why I love technical analysis, that is how perfectly the market turned around. Yes, the Powell pump, I don't know if that's the right way to put it, but Powell speaking when the market went up, let's put that in a nicer way, did get us up to that level. But yet again, a line on a chart, okay, just send this to your friends that say TA is fake, okay? A line on a chart is where the stock market topped out not once, not 2 times, not 3 times, but 4 times in the last year. A line on a chart. This is a imaginary line that I just drew on a chart, and that is where the stock market, with billions and billions and billions of dollars within it, reversed. Just think about that for a second. Yet again, not just one time, multiple times. So where are you at right now? I've had this rising wedge drawn out for a little bit. You broke down from that today. You have seen pretty much reverse autopilot mode. I typically call the market going straight up autopilot mode. This is kind of the exact opposite of it, at least for the last 3 or 4 days since you hit this high on December 1st. So not a great start to the month. All right, it's the final month of the year. This is a dip for right now. We'll see if it gets worse, but you just broke down today. The one thing, at least short term, is that you're still at a support level. This 390-ish area, we were talking about it back when we were ranging over here. I was talking about 390 support and then 402 resistance. You were in that little range. You're back at the bottom of that despite this little breakout over here, which really didn't do much except fill this gap, which is another thing we talked about. But you're back at this level. You can see you have a low here from November 17th, highs here, a low here, a low here, highs over here, a lot of different highs and lows at this level. So this is your short-term support for the rest of the week. If that breaks, then you've got a gap filled down at 381 pretty much. So if that 390 level breaks, there's kind of some room down to the lower 380s. You have a little support at 384 as well from a low on March 25th of last year. But I'm thinking that if this level does break, this green zone I just drew is kind of your next support. That would also probably get you into the golden pocket right around that 50% retrace as well, and then maybe even down to the 618. So you're witnessing a breakdown currently. However, the only little hope is that you have a support level right under this breakdown for the SPY. The MACD also is red for the first time since October 12th. So literally since the bottom of the year, you had a green MACD. Put in your bottom for the year, you went for almost 2 months with a green MACD island. That's quite some time compared to most of these other MACD islands, maybe apart from this one over here. Very long time with the green MACD, and today that switched over to red. All right, so that's really where the SPY is at currently. Moving into the Qs, you're kind of back at this level. This is a very big make or break area for the QQQ. You could see it was resistance in the beginning and the end of October. It's flipped into support for pretty much the last month. Every single time the QQQ has been here, it's bounced at this level. But now you were testing that level with classic bearish divergence. And then also if we go over to the 4-hour chart and I draw a little demand line, you can see that is being broken as well. And if we zoom out here just for a quick second, let me delete this previous downsloping channel. You have classic bearish divergence on the 4-hour and daily MACD. If we zoom out, this is a textbook bear flag in a bear market, which is what I was talking about prior to that Powell pump last week. So you're kind of getting that now. You're still holding a short-term support, same thing I said for SPY. So very short term, at least you're at the bottom of the range you've been in for a while, despite that failed breakout. But if that breaks, then you have gap fills below. And we've seen other bear flags this year take us to new lows of the year. Honestly, I wouldn't put too much hope in those gap fills. If we start turning around seriously after yet another failed breakout, plus the VIX looking like this, that's what could continue the bear market. So that's why I made so many streams in the past couple weeks talking about this just being a bear market rally until that breakout test. And that was it. That was the technical chance. And now you're kind of reversing again. But again, just as I wasn't trying to immediately flip to too bullish when you're about to break out, I'm not trying to immediately flip to too bearish either. You still are at short-term supports. Overall, this is a very frustrating past 3 weeks of price action, especially for swing traders. Maybe not so much for day traders, but for swing traders, you're just going back and forth. For a week, it looked like you were breaking down, then a week looked like you were breaking out, then breaking down again right now. Nothing is really confirmed yet. You're just kind of going back and forth. There's a lot of indecision still in the market, but at some point it's going to break to one side. And we're closer to that bearish side for right now, but 3 or 4 days ago, we were closer to that bullish side. So it's hectic. It is hectic. All right, now moving on to the Russell 2000, same thing. You rejected, just as you held it, you held 188 as support twice in February. You just rejected as resistance twice in the last month. This is also your lowest close since, I think over here on November 9th. And you have a gap fill just below around 178.68. Again, you could draw out that bear flag. I will leave it here on the chart. There's your bear flag breakdown from literally today. So we were just talking about potential breakouts in the market 2 or 3 days ago. And just a few days later, after rejecting that, you are now talking about not a potential, but a confirmed breakdown. Now remember, with breakouts and breakdowns, the actual breakout or breakdown itself is not everything. It's about the fall through price action, what other variables you have, and how you can manage your risk around that. There's a lot of people who just trade breakouts and breakdowns thinking no matter what, if something goes below a certain level, it has to keep going so much more. This right over here is a perfect example of why that's not always true. So it's a start for the bears. We'll see how that continues to develop. The ARK ETF as well. This was the one index. I was flip-flopping a little bit last week, but this was the one index where I kept saying, I still don't know. You just tested this so many times. Typically, if you were to have gotten a large reversal before breaking this level, you would have gotten it by now. So I just think the amount of times you failed to get a large bounce off this level is increasing the probability that it eventually does break. And you were very close to it right over here. It just, you got saved for a couple of days. But now you're heading back lower. This is your lowest close, I think, since November 9th as well. That's very similar to the Russell 2000, if I'm not mistaken. So small caps, mid caps, unfortunately still lagging behind everything. They were the first ones to sell off when we were up all the way over here. They started selling off. The SPY was still around all-time highs when the ARK was around over here. And they're still in the back. So we'll see, maybe one day, but it's still the same thing. And that's pretty much where the market is at currently. I do want to spend a little bit of time looking at sectors of the market now, just apart from the indices. We already looked at XLE, we looked at the energy sector, as I usually do when we look at other markets, because there's a lot more of like global headlines and stuff that can affect that. But I want to look at some of the other Spider Select sector funds. We're going to look at industrials right now, which you can see over here. You have rejected this $101 resistance level. If we go over to the 4-hour, you've got a little bit of a demand line breakdown. Also on the 1-hour, you're testing this support level at 99, at 99. So you've got a breakdown there for the XLI. I also want to look at, I think it's actually already in my watch list. No, it's not. I want to look at the financials now. You can see over here, financials were just trying to break above this green inflection zone here, around 35, 36. You got above it for a little bit, and now you're back under it. You are back testing the 200-day moving average currently, but you are under that zone. So it's not just the overall market. Sector by sector, you're seeing these sell-offs take place. And it's starting again. So let's move on to the swings right now, which are not doing too well. We had a good month or so of swings with the market rallying, but currently we are seeing some more sell-offs. Fisker is still testing the support level. It was reversing off of like a falling wedge breakout. Then that panda fuzzy stupid short report came out. They dropped it down to $7. It bounced all the way back up to $7.70. And now it's kind of back down towards 7. So you're just testing the same exact support level. If this does end up breaking, probably mid $6 level around this gap fill and prior support from this year, it'll be tested next.
One other thing I do want to say though, that I'm just realizing, is that if that does happen,
let's say the market keeps selling off, Fisker breaks a support level, down over there, you would also have a bullish pattern completion zone. So if it drops back down to that level, it just sets up a pretty good reward to risk, because placing a stop under these lows would not be too much of a risk, and then the potential reward would be wherever you wanted to place it for yourself. But this is not as good as it was a few weeks ago, I'm going to be honest, but it's still hanging on to this short-term support, and then definitely above this longer-term support. But hopefully at some point it's been out of this wedge, and the thing with very large wedges is you could break out and it could take months before you actually start reversing. But you're out of the wedge, so we'll see if it can continue to just make higher lows, or at least stay above those lows. AMD tested the stop today, another one which was technically breaking out last week, but got pulled back with the market, and now it did close under the $72 support level dating back to last year. I don't sugarcoat things, it's not a good thing right now. It's not a good signal right now. You just broke back under support. It's your lowest close since November 10th. That was a breakdown today. Same thing, just like the market, you had a failed breakout. Now you're testing a breakdown. This swing is hanging on by a thread. There's no other way to put it. It was close, but you just never really got that breakout for the SPY, and that's pulling a lot of names down now.
Thanks for what you do. Been watching for almost 2 years, and I hope to watch for many more.
Lives in the chat for D. Thank you for the lucky 1111 donation. I really do appreciate it. And yeah, you've been a real one. Anybody who's been watching for more than like a year and a half, because the thing is, you've also seen the other side of this. The past year has been the bear market, but for those of you who were here before that, you know how the vibes were. And if you're still watching from back then to how much easier things were to right now, those are the people I appreciate the most. I'm not saying I don't appreciate any new viewers. I'm just saying for the ones who have stuck with me through thick and thin, I really do appreciate it. D, thank you for all the support, seriously. And I wish you the best. Thank you so much. I really appreciate it. All right, so that is AMD. Coinbase down 8% today as well. It sucks. You know, this swing was just up 10% pretty much, very close to 10% on literally Friday. And now it's down 6%. Very rough 2 days of price action. You were starting to reverse. Market just pulled it back. And you're still above support. If it breaks that, that's where the stop is at on the 4-hour chart as well. Maybe you look at this as like a back test of the wedge. In terms of the swing, you have to hope that it holds. This is what happens. This is what happens when you have those big make or break areas and you don't get the right move. It could pull swings back very quickly. That's why I was still, even though I was starting to flip flop a little bit, I was still pretty cautious about like putting out a lot of swings very quickly. It's only 3 swings outside of premium right now, and Fisker's been a swing for quite some time, probably since like October maybe. All right, so those are how the swings are doing. Looking into some large caps now, Google broke out of the descending broadening wedge, but failed to break above this $100 resistance level. Now it's kind of back testing the wedge, I guess, but you do have some hidden bearish divergence, and you can maybe draw like a little bit of a demand line like that as well. Amazon finally filled this gap from November 10th. That must have been like a very big swing low, because even the Russell and the ARKK ETF, they just closed at the lowest prices since November 9th as well, I believe. So that was a pretty important date to keep in mind. Look at a lot of stocks and what lows they might have put in around that time and see if they break those lows. That kind of is a very easy way to see if that bear trend is continuing, especially on individual names that are not super correlated to the market. But yeah, right now Amazon is retesting that level. 83 is your next support. If we go over to the weekly, that is the bottom of this whole entire consolidation range. You break under that, and there's pretty much nothing until like $68. And it just looks like one huge inverted cup and handle. So we will see. I'm going to read the chat in 1 second. I just want to get through the large caps. Meta, yep, tapped that 123 resistance I was talking about from this low, reversed just off of it, down 7% today. A lot of hidden bearish divergences starting to develop. So keep an eye on that. And it was a nice little move. You had like a little wedge over here. You had a little wedge over here. Both of them played out. But now you could probably start to draw this and start to look at it as a little bit of a bear flag. You've been in a very long-term downtrend. And now you are testing a bear flag breakdown. Not financial advice, but if the trend is really your friend, this is the exact pattern you want to see. Somehow you also have classic bearish divergence after this rallying for the last month or so. I mean, you were, just listen to this. Like, I talk about this the same way I talk about bullish charts. So you have so many variables. Look at the amount of bearish variables, at least short term. A previous area of support, not just from over here, but from all the way back over here in 2018, has now flipped into a resistance. You have classic bearish divergence, and you are testing a breakdown of a bear flag in a bear trend. Not great. So short term, this could put a halt to the weekly breakout that was being tested. I think you really need to get above like 130-ish to be more confident in this from a technical standpoint, at least short term, unless things change. But that's just where you're at. Next up, let's take a look at Apple. I'd probably start to look at Apple right now as a triangle, which is very close to testing a breakdown, but nothing confirmed yet. This is your triangle on Apple. It's been developing since pretty much the end of October, and I already have the levels charted out, so you're testing a breakdown of that triangle. It's literally that simple. All right, let's get those out of the chat. Thank you, Leak. Now I gotta take it off the screen. All right, so that's your Apple triangle. Tesla broke out of the wedge, had a couple decent days of moving higher, but already heading lower. You've got a gap fill around 170. This does kind of look like a potential inverse head and shoulders on the 4-hour chart. However, again, it's just tough when you have these types of patterns in a bear market. Like, they just keep failing and failing and failing. So I don't know, unless it somehow miraculously holds 175, maybe it plays out, but I wouldn't put too much thought into it unless this were to happen. Then, you know, then it'll be a very different story, but it hasn't happened yet. Still possible, but that potential is hanging on by a thread, at least for right now. Let's head back over to the weekly chart for Tesla. Remember, this is the final, again, just like on Amazon, you're kind of testing that final area on the weekly chart. Same thing for Tesla. You break this, there's not much, because you were parabolic on the way up, and a lot of stocks when they're parabolic on the way up, they look like a slide on the way down. So we'll see what happens, but if there's anywhere you want to hold, it's this. Microsoft, this actually does look kind of different on the weekly. It looks more like a downsloping channel with classic bullish divergence. But let's talk about the daily, which broke out of a wedge, got above resistance. It looked like there was some room up to that 266, 267 level where the 200-day moving average is at. Nope, market said nope, nope, nope. And now you're back down under resistance with the classic bearish divergence. So we had the breakouts. It's been the same thing like kind of all year. You had the breakouts, you got a few good days, and now we're already talking about new breakdowns. So things have changed very, very quickly. That's just how it goes. And especially in a market that's this volatile, you have to be prepared for that at all times. That's why no matter how good or bad things look, I try to just be somewhat neutral, because in a bear market overall, yes, you are going down, but the rallies can be very quick and aggressive, and then when you go down, same thing. So it's just being able to be calm is very important. All right, so that's pretty much my breakdown for tonight. Now we can do tick requests. So for the 32 people watching right now, if you want me to look at any chart for you that I haven't already looked at, feel free to drop that in the chat and I'll take a look. Make sure to hit the like button, subscribe button if you're enjoying the stream. If you're not enjoying the stream, I don't know why you're watching it. And let me take a look at the chat. So Kareem says, finally made a live. Glad to see that. The guy says, there's a saying from a wise man, follow the spy, you won't die. Headline, swing traders upset, prices swinging. I repair, just bought Fisker today. A lot of vibes in the chat for D. And I'm seeing the tick request. I see there was one from before, TSM from KLF. All right, so let's get started. We're gonna look at CLOV, NVIDIA. CLOV broke support today, I forgot to mention that. All right, let's start with CLOV, which just broke its another final support. There was the final support over here, and there was final support here, then you just broke another one. And this is why I was saying, like, you can get all the breakouts you want, but until you just start getting an uptrend, like, it's just hard to put a lot of trust into the technicals on this one. As much as it hurts me to say, it's like I've just seen this so many times, I'm just not surprised anymore. Yeah, you broke under your 121 support, you held that for like a week, you rallied off of it. I mean, it looks like nothing, but to be fair, it was a 13% move and did go right up to this gap fill. I think we talked about that. And then shot right back down with the market under 121, so that's now your resistance. It's really not much apart from that. There's nothing really to say technically. That's why it's been a little bit tougher for me to talk about CLOV on the stream, not just because of the price action, just because it's literally been the same exact thing since the end of August. Like until there's like something to give an update on, it's the same as it was almost every other day before. It's just like opposite the market. It's kind of in like reverse autopilot mode. So that's just the trend is in a downtrend for right now, and that's just the moral of the story until it's not. Which at some point, I don't think it will stay like this forever. It's just who knows how long. And then TSM, very, very simple. This stock is in a range between 78.60 and about 83.5. We'll see which way it breaks. If it breaks up, you got the 200-day moving average and this low from the beginning of May around 86. If it breaks down, got a gap fill right over here, and then also a low from July at 74 kind of. So those are your next levels depending on which way it breaks. NVIDIA, it was a premium swing trade. It's currently hit 2 out of 3 targets. Now it is starting to show a little bit of classic, or it's confirmed classic bearish divergence. It is just like most other indices and a lot of large caps testing a breakdown currently from an ascending broadening wedge. It was a nice move. It hit 2 out of 3 targets. Now it's testing a breakdown. Can't be too surprised. Very simple. Palantir kind of back at this pattern completion zone of the shark. Nothing much has changed. You got a small move actually off the second low there. Now you're kind of back down to levels. So 690-ish is your short-term support. If that breaks, it's just all-time lows, it seems, around 644 after that. But if we delete all this for a second, it is kind of like a little bit of a megaphone pattern developing. There we go. T-Mobile doing pretty well really since January, literally kind of inversing the market. But look at this. This is crazy. Right off the pattern completion zone of a bullish shark, right at the 1.13. And this is why harmonics are so cool. If you haven't seen my video in the free course, the link for that's in the description on harmonics. Look, it tapped the pattern completion zone of this bullish shark. Since then, it's been literally going straight up, and it actually finally got to the second target from a textbook, which would be like that C point, I think. We're gonna come back to that in a second, but let me change that to white because it's kind of blending in with the 200-day moving average. There's a lot of different demand lines you could chart here. I'm gonna go with this one because you have a low over here and then a low over here. Supply line's a lot easier. So you're in a little bit of an upsloping channel slash rising wedge, short or long term, and then short term, just a little consolidation. It looks like it came down to fill this gap, and then you got some resistance around 154. But again, just looking back at this pattern completion zone, you can see it right down to that 1.13 level pretty much. Right over there. And if we even go to the SPY today, this is another good example of a 1.113 reversal. Today the SPY reversed right there as well. It wasn't a shark, it was a bullish alternate bat, but you can see right at that D point is where you did get a little end of day rally for about 0.5%. Almost just dropped my T. So that's a couple nice examples of 1.13 harmonic reversals. That's a little bit of Fibonacci for you. Wow, a lot of take requests tonight. End phase. I was just looking at end phase, and I was a little bit. I liked how it looked a little bit more a couple of days ago with the inverse head and shoulders look, but right now it's kind of like a little bit of a rising wedge developing, and you could see this 324 level is resistance. You were just breaking above it. This is a story for a lot of different stocks. You were just kind of breaking out, and you've got this reversal. It's a little bit of a big fake out. I mean, that doesn't really make it's a little bit of a big fake out. It's a big fake out, not a little bit, at least for right now. But again, it's just like every 2 days it changes, so it's very hard to like cover a lot of this stuff. But yeah, I think under 324 is where it gets a little bit more scarier because that's where you rejected in the end of September as well, and you went down to about 239. You also have a gap fill and some prior resistance around 220. And if you're really zooming here, another gap fill around 254. So we will see. RNG is just going down and down. I mean, I don't really know what else to say. kind of like broke out and then back tested the breakout of this wedge. However, if this does kind of look at it like this, you get this triangle breakdown and it plays out, you got a gap fill pretty much at those lows of the around 29.5. I'm just going to look at one of those from that list. Do Southwest Airlines testing the 200-day moving average. Really all these swing lows can be supports if it sells off again. Those actually line up pretty nicely with some lows from the past too. So the last few times you did this, that was your short-term top, or actually kind of long-term top. So you're pretty much back at that 200-day moving average. However, longer term, it seems like it already has, or no, this is actually pretty much like the SPY. I was going to say it looks like it already broke out, but it did not. So huge wedge. The last two times that you had pretty much gotten up to this supply line and the 200-day moving average, the supply line is the red line, the 200-day moving average is the yellow line. That really is where your tops were at. So probability is not really in your favor short term, but you know, maybe the 30% chance that it goes against the current trend, it does this, that'll be a really nice breakout. But until it does that, it's a little bit tough because you even draw a domain line like this and then you're testing a breakdown. So it's a very, very crucial area for where it's at now. It's like right over here. This is where everything lines up. So next couple weeks should be pretty telling for that. AMC, I don't know if I talked about it on the stream. Actually I did, it was on my last stream. There was a huge trade on it in premium a couple days back, but it's been selling off since. And what it did unfortunately do was break under, it's actually on the 1 hour chart, break under this 686 level. It was resistance over here and support over here. By the way, this is a trade I was talking about. But it broke under, it's gone all the way back down and now it's under support. And there's not a lot of support now until about 5.5. But look at this, all right? I'm not trying to pat myself on the back like too much, but I alerted AMC as a swing, like over here. These were my 3 targets. It went right up to that 3rd target. And then at that 3rd target, it is reversing. In hindsight, that was pretty much perfect. I'm just going to be honest, okay? I was honest about flip-flopping with the market last week. I'm going to be honest about this. This was a perfect swing trade. I wish they were all like this. Fortunately, they're not. But you're heading back down now. You have somewhat of a support over here around, or from May around $6, but then after that, it's a bigger one around $5. All right. GameStop. It's a good little similar stock, is testing a breakdown. It was in this range and now it's testing a breakdown from this range, or it's pretty much, at least from a daily candle close perspective, it has confirmed that breakdown kind of. So your next low, you're kind of matching this low from September 7th. Your next low after this is around 22 from this low over here, this low here, and then also this low right over here. So I did not even know this. We've been watching this range for a very, very long time. And it's like a lot of other stocks. A couple days ago, it was literally testing a breakout, and now it's breaking down. All right, so that is GameStop. CLNE, XOM. Appreciate it, Zeke. I'm waiting for this tip thing to pop up. Let's see if there's any chats from 60 earlier, though. N-phase, all-time high. We already looked at N-phase, I'm pretty sure. Alright, so let's keep going until that pops up. CLNE. It had like the inverse head and shoulders look. It made it kind of close to the neckline and then it started reversing. Now it just broke the 200-day moving average. And I don't know, 640 is your resistance. You kind of rejected that bearish engulfing yesterday. New low close today. I think the next support's like 520. It's just kind of working its way down for right now. And then XOM broke down from this rising wedge. There we go. I was waiting on that. It was giving me anxiety. I'm not going to lie. With a 4.44 super chat. Got Elon dancing on the stream. 65. Thank you very much for the tip. 5s in the chat. I already see them coming in from Zeke and the guy and GT. So I really do appreciate the tip. Thank you very much for supporting the stream. All right. So yeah, XOM broke down from this rising wedge. And now it's retesting previous resistance as a support. I don't know. Does this go back? Yeah, this goes back to 2014. So if you really do break under this level, I mean, you can just extend this out. Next level after that's around 96 from highs in 08. So we'll see. Let's keep going. The like button if you didn't already. And 65 said, thank you for the look at ENPH. Thank you for participating in the stream and for the tip. I appreciate it. All right, so SOX, is this the right one? Or is it this one? I'm gonna go with this one because it says NASDAQ. So not that one. Actually, I think it's like the same thing. Little consolidation range just kind of looks like, if you were to go to low time frames, I bet it would look kind of like Wyckoff distribution right at the 200-day moving average. So that's not great. Short term, that's not great. Longer term, we did just break out of this, what's it called? We'll call this a down sloping channel, kind of a broadening wedge too. But you did break out. I don't know. There's still a chance that this breaks up. Really, what you would want it to do optimally is get above this level where I'm putting like this point at. If it doesn't, then maybe this breaks down and you just back test, maybe to go down to fill this gap. There's a lot of potential. It's a make or break here. It's a 50-50. I'm going to be honest. I'm like saying all these different things. It's at a 50-50 area, but those are the different variables. Target. It's in a triangle. It has this huge gap zone, but only really got up to that 200 moving average before pulling back. Also 168, a low from March of last year, has flipped into resistance. You saw it over here in October and just recently a few days back. So this is your pattern for right now on target. All right, so that is going to do it. Final ticker of the night is BIBE. Drop your vibes in the chat. Shout out to Zeke. Shout out to all the mods in the stream as well. Shout out to the guy. I don't know if there's any more. Hit the like button, hit the subscribe button. Check out the links in the description. I'll be live again tomorrow night around the same time. I really do appreciate all the support. Thank you for the tips tonight and all of the participation in the chat. Very good chat tonight. I really do. Makes it a lot funner to stream when it's like that. So keep it up. Thank you, and I'll see you tomorrow night. Peace out.